This segment, What's the Rent, is brought to you by Rent-A-Meter. Visit bryanchavis.com/Rent-A-Meter for rental property highlights. B, welcome to the game show, man. How you doing today?
Good to be in the hot seat.
Man, hey, well, this is a new segment that we wanted to start up, sponsored by Rent-A-Meter. They do these amazing rental reports, and you've been using them for quite some time, haven't you?
Over a decade, yeah.
Well, so what I want to do is a game show called What's the Rent? And I figured what we can do is we can start with the top 10 rental markets. We're going to start with our very own St. Pete market. That's where you currently own property. Every week I'm going to just have you guess the rent. I'm going to give you 3 choices, and we're going to run a rental report and, use that to see what the rent is.
Okay.
All right.
Let's do it.
So this is our rental report from St. Petersburg, Florida, based on 944 single bedroom rentals seen within the last 12 months. Is the rent A, $900, B, $1,100, or C, $1,300? And we're looking for the average rents.
So considering the demographics, considering employment, consult my COTA process, strategic evaluation of a target
strategic
area.
evaluation.
I would have to say B.
Okay. And the answer is B. The average rents are going for $1,124 in St. Petersburg, and these are for 1 bedrooms. And so, congratulations, B. You are the winner of What's the Rent?
Man, it's good. Good to be a winner. Good to be a winner. Participate in the Tournament of Champions.
And we've got a gift. We've got a prize for all of our listeners. If you go to bryanchavis.com/Rent-A-Meter, you're going to be able to get some free rental reports from Rent-A-Meter. Actually Rent-A-Meter Pro. So when you sign up for Rent-A-Meter Pro, you're going to get a detailed property list. This report provides a detailed list of properties used in the analysis, including most current listing dates, building types, size, square footage, number of bathrooms. Also, you can filter it by maximum age, building type, and radius. You can actually share these user reports with friends, family, tenants, coworkers, and you can customize them as well. So you can actually add your own logos. So it's just a really slick tool. We love using it at Bryan Chavis Coaching and Consulting. So please visit.
Extremely useful.
Absolutely. So please visit bryanchavis.com/Rent-A-Meter. And Bryan, thank you so much for playing What's the Rent?
Thanks for having me.
All right, B, we are live on Facebook.
All right.
And we're live in the studio today. This is actually episode 21 of the By the Block with Bryan Chavis podcast.
Get out of here. 21.
Crazy.
Blessings. That's awesome, man. That's awesome.
Absolutely, man. How you doing today, bro?
Man, I'm good, man. It's my son's birthday today, so my son Judah is turning 2 today. So big shout out to Judah. His big two year birthday party. So we'll be celebrating all weekend.
Absolutely.
So yeah, man. Awesome.
You just had a Mufasa Lion King moment here. You were looking at your pictures of your son there.
Yeah, man. It's on Facebook, when they do those 1 year anniversaries and things like that. Yeah, man. It's like, wow. It just goes to show you how,
it's crazy.
Yeah. I feel like we've been doing this for like a while.
Yeah.
We've only been doing this for a couple of months. So,
yep.
Yeah, man, just is awesome, man. Just thankful, man. I'm just extremely thankful and blessed.
Absolutely, man. I can't wait to hang out with him on Saturday. Such a cool kid, man. I remember he saw me and just gave me a little thumbs up out of the blue. Just like, no thumbs up, man.
Yeah, I know, like a grown man. That's him. Yep. Yeah, man. This year at Disney is gonna be fun, bro. When we all get out there again, everybody's getting a little older.
Exactly, man. Well, oh my gosh. We had an amazing session today in the Multifamily Matrix, man.
Yeah, man, we did.
And we talked about how a recession impacts multifamily, and you kind of put that in quotes, recession. Love for you to elaborate on that. As we go through this podcast, what we've seen is stock markets dropping and all these different things. Even hitting home when they canceled the
NBA, the NCAA tournament.
I know, man. The world. What is the world coming to?
Man, if they cancel the TPC, if they cancel the players, which I don't think they will, because ultimately, if they remove the fans from the golf tournament, who cares? But please don't cancel the golf tournament. If they cancel the players championship, then I'll hopefully it's underway. Hopefully, and I haven't looked. Hopefully, the first round is well underway. Should be well underway, but. Yeah, man, this is this is kind of stuff where you remember why Buy It, Rent It, Profit is such a popular book, because it wasn't just written about how to syndicate,
right? How
to underwrite, how to buy investment property, though it has all those components and chapters in it.
Yeah,
but it's mainly 80%. The bulk of it is procedures.
Right.
It's a procedures manual. That's really what Buy It, Rent It, Profit was. Is a distant cousin to the procedures manuals I use to manage thousands of units. So at its core, it's all about operating,
right,
in operations, and how to operate in various different scenarios. But yeah, man, I mean, if you really don't understand operations, then it's going to be difficult. People are waiting, and you have various different perspectives,
right?
So you've got a group of people going, oh yeah, I'll get involved with real estate once the market crashes, and then I can grab stuff, and that's an approach. But the main topic today is, how do you evaluate assets currently, if you own and operate over the last 3 years, or refinance recently? How does a recession impact you? Right. So there's various questions. There's a ton of questions that must be asked. So you're an owner-operator. You're probably meeting with your asset manager and your property managers, and you really need to be reviewing your business plan, your management plan. Say business plan because people quickly understand what that means, but a business plan is a management plan, which is a business plan for the property. And each property should have its own management plan.
Right.
How the property should operate. In times like this is where, as an operator, you're having to reevaluate areas on operations, from leasing. Obviously, the number one thing is, where do we set the rents?
Right.
How are the rents going to be affected? But it goes deeper than that. It gets much more granular. So where you have to figure out, how's your prospect tenant going to be affected? So not only how your current tenants are going to be affected, but how is your prospect tenant going to be affected? How are you going to market to that individual?
Okay.
Are you going to get ahead of it and possibly start offering a slight reduction or specials in rent, concessions, things of that nature? So these conversations are the conversations that one has to have, and even if whether or not you have to offer, do you want to get ahead and still? Because if your competitors are offering, even because here's the thing, that in a market, if your competitors are offering huge discounts because they're over leveraged, their margins are much tighter, so they've got to soften rent to get occupancy up, that's still going to affect you. Even if you hadn't made a mistake, you leveraged, you underwritten properly, because 5 tenants come, 3 out of the 5 are probably going to go where the lesser rent is. So you have to kind of think like the prospect tenant. If the market is showing a bunch of discounts, but you're at market with your rents, unless they absolutely love your property, chances are you're going to lose a lot of prospect tenants, a lot of traffic. So being able to, offer your own concession perhaps, or, waive application fees, you're going to have to look at certain things, lowering deposits, things that may not really hurt you all that much. You have to sit down and think through that. And then you also have to think through, obviously you don't want to offer that in a 12-month lease term. So you want to do that in the lease amount. Each municipality is different. Each state is different in their laws. 80. So you can apply the 80-20 rule here, where 80% is applicable. So,
Okay.
Most states don't allow you to do anything under 7 months.
Right.
And if you have under 7 months, a 7-month lease, then you must pay hotel motel tax. So ideally, you want to figure out what your smallest lease terms are. And then you want to be able to then maybe, if you're going to offer some sort of concession or some sort of reduction in rents, then you want to offer that only on your shortest lease term.
Right.
So you're able to, if the market changes quickly and there's a miracle drug that comes out in 90 days or whatever, then you're able to make those adjustments accordingly, and you're not locked into a year lease, offering that concession. So
I want to back it up a little bit. So as people are listening, everyone, I see things on social media. Oh, now's a good time to buy some stocks, and now's a good time to buy this, that, and the other.
Always, yeah. When there's blood in the water.
And we heard, now isn't it a good time to just buy multifamily property? But why are we not placing the focus on that versus more of the operation side? Because, the acquisition junkies, all these people running these spreadsheets and stuff, and grab some undervalued properties. But still, what is the challenge? You're holding these properties, but you still got to operate them. There
you go. And you just said it. So, our approach is always chess and not checkers.
Right.
We all know what blood in the water means. You get discount on prices. Okay. It doesn't take a genius to figure that out.
Right.
You don't have to read a ton of books on real estate to understand that when there's a recession or people are starting to hand back properties to the bank because they can't make the note because they're over leveraged or whatever it may be, and that, that's still to be determined depending upon how long of the stretch this recession may be, to where we start seeing, foreclosures.
Right.
And obviously, if people are selling, there's going to be huge discounts. And even if someone's right now has a property up and they're looking to sell and create, ready to, move into a disposition, they're going to have to think right now. They're going to have to, they're going to have a conversation with themselves and say, are we going to offer a discount? Most right now, it's a little too early. They're probably going to just still feel the market out. They're going to be dealing with their brokers and the sellers. The brokers, the commercial brokers are going to be probably telling everyone to just let's see how the market,
right,
how the multifamily market reacts. Are you going to see assets sitting a little longer right now? I don't really anticipate that or see that because I don't think it's that much. I don't think that shoe has dropped. That domino has tipped yet. Just for the simple fact that I just don't feel like we're that far in the panic mode.
Right.
Because you got to remember with multifamily, the reason why you invest in multifamily is because, when the head of the snake gets hit, the tail is, that lag is 4 or 5 months. Gives you a lot of time to plan and operate. So, you're going to see a 3 to 4 month lag period before, you start seeing people maybe adjust prices.
Right.
And a lot can happen in 3 or 4 months. Look what happened just in the last 3 or 4 months. 3 or 4 months ago, we weren't even talking about this really.
Correct.
So we don't know how the pendulum is going to swing, but we must, if we have to forecast, you always got to forecast for the worst.
Right.
I did that going into Park Plaza. Forecast for the worst. Always looking at the value add on the operation side. Right. And what flexibility do I have in rents? Not how much I can raise rents, but how much can I fall back?
Got it.
See, a lot of people are thinking when they look at a deal and they're evaluating how much can I raise rents? That's a conversation I have. But an equal conversation to that is how much can I fall back? If current rents right now, we're buying that property and rent schedules are $850 like they were 2 years ago, could I still operate at $730 rent schedules?
Correct.
If something happened? And so, that's a question too. So it's not how much I can make, but how much could I fall back? What occupancy do I need to be and maintain to be able to cover the note, so on and so forth. So those are the questions that you have to ask. But the one that you're talking about as far as just, blood in the water, let's find deals. I mean, anybody, you don't have to read any books to figure out how to buy, assets at a discount when there's blood in the water. So, which I'm sure there will be, depending on the severity of this recession.
Right.
Before the coronavirus, you were seeing some hints, periodic adjustments in the inverted yield curve. You've seen, which is the short-term rates outpacing the long-term rates.
Right.
there are some hints. Seems like this corona has pushed the markets into, panic.
Right.
Markets panic. They panic about a lot. Anything. You can say something, certain key officials can say something in the media, and it will send the markets into a frenzy.
Okay.
But this is obviously a little bit more than just a normal frenzy. Affecting China, affecting Europe. Schools closing down, the NBA shut down, NCAA looks like it's going to shut down, sports shut down, baseball, hockey. This is huge. They're saying, where 200 more are gathering, it needs to shut down. What impact does this have on the economy? So it's going to have a major impact. Short term, you won't see anything hit the multifamily. But if you are buying and you're operating and you're a general partner right now, and you're not thinking long term, and you're not playing chess, and you're continuously playing checkers, and you're continuously being reactive and not proactive, then you'll be one of the ones that that are offering the blood. When that blood is in the water, you're the one offering up the blood when it does hit the water.
Right.
Your property will probably end up going back. You're either over leveraged or whatever. There's a ton of reasons. We'll talk about that more in a minute, but. The key right now is just really saying if you're a general partner, you got to forecast this thing out, and you got to really see, like, if this continues 3 months, 9 months, a year, how is that going to react? And there's going to be a reaction. It's going to hit the multifamily market within 4 to 5 months, roughly, because of that lag at what hits the market. After 3 or 4 months, you'll start seeing things happen because the impacts of the wages, the impacts of, so Mark Cuban said, hey, look, I'm going to be paying for the people that work at the arena.
Right.
You know what I mean? Everybody's going to take a hit. So people working at the arena, what if those people that he's talking about, those individuals are going home somewhere tonight?
Correct.
Right? They're going home somewhere tonight. They have a lease.
Right.
They're going to a rental property tonight. So that NBA closure affected how these individuals are getting paid.
Right.
Because Mark Cuban stepped up and said, hey, I'll pay their wages. I'll take care of them. That doesn't mean every owner said that. And so some people may not get a paycheck. Hours at Walmart may be cut back.
Correct.
Amazon, wherever it may be, it's going to affect the job market. What affects the job market affects your prospect tenant's demographic and your current tenant.
Absolutely.
And how is it going to affect? So you then got to start planning for it. So obviously softening in the rents. What adjustments do you need to make? You got to start focusing on qualifying criteria, making the adjustments with current tenants right now. You may have to start planning for delinquencies, an uptick in your delinquencies and turnover.
Mm-hmm.
So these are the things that you need to make adjustments within your management plan. These are really all conversations that are tough to have, but you have to have, and you have to be ready for them. And it should have been ready in your underwriting. When you bought the property, you should have been planning for this. A lot of people ask me, well, why did you buy and you buy and focus only on these core markets? Even Joe Ebanks, our director of acquisitions, he was asking me at Chavis Capital. He was like, showing me deals in the pipeline, and I would always, no, not interested in that. And they were solid B minus, C plus, B properties. And, because of where they were located and because of the demographics and psychographics of the tenant, I said no, because, I was planning moving forward, on what we're doing, what we're dealing with some sort of recession,
right?
Some sort of headwinds, preparing for these headwinds,
right?
And, so I don't mind paying market for an asset that is sitting in a position to where it's going to be least affected by some of this volatility that you see. So as we talked about in the coaching session, you seen me when I went and pitched in Austin, the deals to investors, is that my whole pitch wasn't, I'm not offering you big bang returns. I'm not offering you home runs. I'm offering you singles.
Right.
I'm offering you stability in multifamily. I sold stability, efficiency from which you would get your money back. Those are the things, the terminology that I was using, because now, you look like the smart one in the group. Correct. When people are saying, oh yeah, the volatility everywhere, you're like, yeah, now you see why I wasn't going to offer you a big bang for your buck, but I was going to offer you stability. Because right now what people want more is what? Or want most?
Stability. Absolutely. I can imagine all the letters that are going to be going out to investors. We're sorry to inform you that your 12% returns that we promised you are not going to be coming out this month, this quarter.
Can't make it.
Yeah, we overpromised.
Can't make it. And and a lot of, hopefully a lot of underwriters have made the proper, or a lot of the investors, especially a lot of, nowadays there's a new guru every week in multifamily, and I've always questioned how long they've actually been in the industry, to have seen any sort of recessions. I've been 20 plus, over 2 decades. I was there during 9/11. I've been there during the many recessions. I was there in 2008. This is all I know is multifamily. Mm-hmm. I understand how it affects every aspect. But yeah, how you over leverage with demographic. There's a lot of good deals that were out there that I passed on because it wasn't the right demographic. But people don't talk about demographics. They just love to talk about the building,
right?
The market. But what does that really mean? When you talked about the market, what were you really saying? What does it really mean? For me, the CIOTA process, strategic evaluation of a target area. I'm evaluating a target area. I'm focusing on demographics and psychographics of a tenant base. That's all I'm focused on. I can care less for the most part about the building itself. Brick and mortar doesn't pay rent. It's documented in my book that's written back in 2000, originally in 2008, 2009. I'm saying these things.
Correct.
I'm not saying these things now because we got a recession that makes for a hot take. This is fundamentals that I was taught in the industry that you live by. And so the idea is that absolutely, man, you have to understand that this is all about demographics and psychographics, because the rent and the net operating income comes from rent. Rent is paid by tenants. Tenants are affected by the market.
Right.
Tenants are affected that, schools have to shut down, that employers are saying stay home, hours at Walmart may be cut back, or Target, or whatever. In the service industry, if you're catering to a lot of servers, that you're going to see a downward tick in people patronaging your restaurant, or you're going to see a pullback. And when this happens, go, hey boss man, can I get those? Can I do that double? We don't really need you for a double. You know what I mean? I was going to ask you to give back a few hours. You're going to see things in the conversations like that. And so what that's going to do with your current tenant base is you're going to see an uptick in delinquency. So you have to be prepared. You need to look at your eviction policy. If you ain't spoken to your landlord tenant eviction attorney in a while, you might want to call them and start preparing and really look and evaluate your collection policy.
Right.
You need to make sure and understand that you have that process down. What it takes to collect rent timely in a timely manner. What does that look like when a tenant is not paid rent? How are you going to work with the tenant? Are you going to work with the tenant? And if so, what are the rules and the boundaries before you cut the umbilical cord there and send them on to the eviction attorney? You need to look through all these policies. This is management. See, no one was talking about this.
No.
Prior to recession. It's been so rosy. It's been great. It's been go to a boot camp, learn how to invest in multifamily.
Right.
Put all your issues onto the third-party property manager. They'll run it for you. They'll handle it for you.
You always say, what buildings don't pay rent, people do. And there's a statistic that said 56% of people don't have 3 months of, income saved up. They're 3 paychecks away from financial ruin. Mm-hmm. And that means
probably even less if you're renting.
Exactly. And so over half of your tenant base is 2 to 3 paychecks away from financial ruin, but you're, just referring on property managers or your underwriting. So it's interesting.
It's very.
Yeah.
It's to some it's awesome. It's exciting when a lot of the folks you're going to get to see who's swimming naked when the tide pushes back. So, and if it's not the coronavirus situation, because we really don't know if if medicine is introduced where, and this may be here today, gone tomorrow in 3 or 4 months.
Right.
But if it's prolonged and it lasts 6 months, 9 months, a year, you're going to see how this eventually affects multifamily current operators. Not people looking for deals. People who are like us right now raising money and going to be looking for deals, this is good. This is kind of, you've been waiting for some sort of issue to come,
of course,
where you're able to find assets and perhaps get them at a discount or some sort of discount,
right?
And not just look at the value add play from the operational side of things to where you're actually getting a discount.
Correct.
So for that topic or subject, then things are, people are unfortunately excited about that possibility. But if you've refinanced or you're operating currently right now and possibly got into a project and the leverage is not favorable, 80-20, this is concerning. Whether or not, depending on how long this, you have to turn, when you have to steer your ship into these headwinds, okay, or these headwinds begin to rock the boat, the question becomes more so, in the initial, when the winds pick up, the waves start crashing, the boat's bouncing back and forth, the initial question to the operator is not really how big are these waves,
right?
But how long are they going to last?
Got it.
Because most people can navigate a little bit and do an adjustment here and there, move a few things around on the ship, disperse the weight a little differently,
right.
And you kind of ride the waves a little bit. You know what I mean? You hold on for dear life and you ride. 3 months, okay. 6 months, 9 months, a year. You know what I mean? There's no port in sight.
Right.
Supplies start dwindling, throwing stuff overboard to balance the ship out. You're trying to, everybody's strapped up with life preservers and there's no end reserve. And it's tough because a lot of folks haven't underwritten and don't know how to really run an asset for a prolonged period of time like this. So you're going to see, if this lasts long, you're going to see a situation. And if it doesn't last long, then it needs to be a call to arms for a lot of operators. We know a lot of owners and stuff. There's tons of owners out there that have got thousands of units and have no clue what they're doing. A lot of these individuals you're going to find out who really understands operations. You're going to find out that investing is more than just writing a check and being able to acquire investment properties. That it's not monopoly. It's not as easy as it has been over the last decade.
Right. And
you're going to see that there's a level of skill. And I've always said, that, read my books. What I'm saying in this podcast and what I've been saying in the coaching and who I am, this is not just a show because of the recession and what we're doing. This, you can read my text and go back 10 years of me talking. This is fundamentals has been the core of who I am. So at the end of the day, this is now when you get to see who really has a skill set, and everyone thinks and assumes that because you have the ability to raise money and buy a property and you can underwrite and put stuff in the software, the spreadsheet, and get these numbers back, that was investing in multifamily. And that's all you needed to know because, the more heavy stuff, you just push that onto a third-party property manager. But I've always told you that, no, you're the general partner. You need to create at least the management plan. And then you hand that to the third party and say, this is how I need this property run and maintained. Because when issues like this arise, you want to know that you have a team in place that is able to make the adjustments. What makes the Patriots so well, they come back in the second half and they've made all these adjustments, and it's like they come back from, being 20 down in the Super Bowl or whatever it is when they have these deficits. You never count them out. Why? Because they make the adjustments. That's what you need on your team. You need a team that's able to make adjustments. You might get your butt kicked for the first couple of months, but you're able to go in, look at qualifying criteria, look at the way you collect rent, look at your policies, tighten things up, make changes in qualifying criteria or concessions that you're offering with your rent, for a period of time. And, I'm never big on concessions, but sometimes you offer concessions to be able to get ahead of what the prospect tenant is feeling, because they're feeling emotional right now. They're feeling, like vulnerable right now. Like, oh God, the NBA is closed. Baseball may not happen. NCAAs, they're feeling really like, maybe I shouldn't be moving right now. Maybe I should move back in with mom or dad, or maybe I should double up with my spouse or girlfriend or what. boyfriend or whatever it may be. So you have to address that. You have to. Whether or not you financially at your property need to right now, you may have to address that when it comes to amount of traffic and qualifying criteria. Now, if you can sit on your vacant units for a period of time without having to lease them, and you can sit for 4 or 8 weeks and kind of really read this out as far as reading the tea leaves of where this is headed, then wow, you're fortunate. But I say you are 1%. That's 1% of anyone listening right now. 1% probably can do that.
Wow. 1%.
One. And I'm being generous. Could probably say, hey, look, I can sit on the vacant unit for a couple of months. It's not going to hurt me in the multifamily space. Won't hurt me.
What are some ways that investors, people who currently own multifamily, can learn from you? I know we've got another young gentleman who just joined your coaching program. How would you be able to work alongside investors and help them to kind of recession proof their portfolio?
Well, I wouldn't. Yeah, first of all, we wouldn't call it recession proof because you cannot recession proof anything.
That's cool.
The only thing you can do is make adjustments,
right?
Because you can't stop the onslaught of a recession and what it's going to bring. The only thing you can do is make some adjustments to weather the storm,
right?
And then you have to pray that it's not going to be longer than 9 months or a year, because no one can really last. No matter what adjustments you make, you will usually succumb to the erosion of the net operating income.
Right.
Okay.
Right.
But adjustments are made. Key points are, I've just given them, you're looking at the way you operate day to day. You're looking at, the lifeline, anything that affects net operating income, collections.
Yep. How
you handle maintenance, upgrades in units. Everything has to be reevaluated, readjusted during the recession.
Right.
I at one point it got so bad, and this is at the multifamily level.
Yeah.
At a huge level. We were using toothpaste.
Wow.
Instead of caulk.
It's that bad.
I mean, and I'm being dramatic.
Yeah, but it happens.
But I'm trying to sell a point here.
Absolutely.
My point is that you got to cut back.
Yep.
You have to cut back. We're filling holes in the walls using toothpaste.
Right.
And then painting.
There you go.
Just small little. Yeah. But my point is, and again, that's dramatic, but my point is that, you've got to look at every aspect of operations, every aspect of collections, qualifying criteria. You got to understand how to position your product in the marketplace right now, where you're not looking like you're dying, but you also want to offer a concession, not because you need to sometimes, but because your neighbors and your competitors are offering, and you want to be able to compete with the traffic. So then you have to make adjustments in your rents.
Yep.
And as far as your lease terms, because you don't necessarily want to offer a discount to give someone a 12-month lease. I don't want to be locked into that kind of discount for the year. Right. So then you got to figure out what you want to offer. We're talking about, this utility company that we wanted to maybe work with and start doing the billing. How does that work? Right. Do you introduce that now in a recession? That's going to hurt. Right. That's going to hurt a lot of people trying to sell that product in a recession where, right now tenants are, they're trying to figure out how they're going to survive. True. And now you're going to charge them water. You really, this is delicate. So, there's a lot of things that have to be. So you have to focus as an asset manager and property manager. You have to focus on operations. And these are the key points that we talk about. Everything that affects net operating income. Right. So maximizing income, minimizing expenses. What is affecting the net operating income on a monthly basis? Collections or the lack thereof, vacancies, both physical and economical. Right. So, those are the areas, that you have to focus on. You're looking at, bad debt and loss to lease. Yep. So if you got vacant units right now, and your competitors are now offering all these concessions, you're not getting a ton of traffic, your unit's now going from 2 weeks on the market to 4 weeks to 6 weeks. Right. How's that affect? Now Zillow charges, especially in our market, Zillow charges you to advertise. So you're looking at advertisement costs, you're looking at loss to lease, all this. So you might have to make adjustments to get that traffic in. Better to make adjustments than to stay at $1,000 rents or whatever, and be vacant for 4 weeks. If you get the $9.99 now, it may take you longer than a 12-month lease term to get that recoup that lost lease. So if you had rented it for $9.50, I'm just using simple math,
of course,
and leased it in 4 days versus 4 weeks, what does that look like? So this is where you have to start getting with your team and really understanding. Someone has to take the bull by the horns and say, okay, this is what we're going to do, and this is how we're going to guide this ship. And then you just pray that it's not for a prolonged period of time. And if it then becomes prolonged period of time, then you have to start making some more adjustments and more phone calls and more, you're always adjusting.
Absolutely. No, I love it. And B, thank you so much for coming to the studio and always sharing such your wealth of knowledge. If you guys are interested in learning multifamily, if you own properties currently, we're actually doing some free consultations. Go to bryanchavis.com. You can sign up for a 30-minute consultation with Bryan himself. Also, we have our group coaching each week in the Matrix. You can go to bryanchavis.com/matrix for our multifamily Matrix weekly group coaching sessions. And then also you can become certified as a rental investment specialist. Make sure you go to bryanchavis.com and get signed up, because you're going to want to get this certification. You're going to want to, hone your skills and become an expert in this industry so that you can work with investors and also, continually grow your portfolio. But once again, B, man, thank you so much for being in the studio, man. Anything you want to share with our listeners?
Yeah, man, I think, we're probably going to stay on this subject.
Yep.
In the podcast, as long as we're in this environment, because I think, we already have pretty much what we're going to talk about preset. But, when you have situations like this, for me, this is crisis mode, and people have to start making these adjustments that we talked about. So I think it's very timely, and I think people are going to have questions about what adjustments do they need to make? How do they begin to make these adjustments to their management plan? A lot of people don't even have a management plan.
Right. So,
what do we do? How do we handle that? What questions do we need to ask our property managers? If we're owning and operating our own assets, Bryan, what do we need to do? What changes do you think we should make to our qualifying criteria? How do you think we should make adjustments to rents? When you said we got to look at our collection policies and procedures, what things are you looking at? On how to collect. And, when you said, we need to reach out to our eviction attorneys, what questions are we asking? We're going to be we're going to be going into a deeper dive, I think, in the next, several weeks, and talking about various different topics that are timely and how to operate in a recession right now, and kind of pause from what we already have canned and ready to talk about, not already on the deck to talk about. In our podcast, I think we'll stay on this subject matter. So I encourage anyone who owns, operates, thinking about operating a multifamily, because it's still a great market. This is why you want to invest in multifamily, and that's one of the things I wanted to talk about too. This is the reason why you want to be in multifamily, because this is what I talked about. I wasn't trying to sell high returns. I was selling the stability. This is why multifamily is still a really great asset, and is a great asset, because I'm getting a lot of people in Wall Street. They're not getting 3 to 4 weeks to make adjustments. They were hit over the head almost overnight. The Dow takes a dip during that day. How do you make adjustments for that? You don't. You just take the hit. With multifamily, you're investing in commercial grade assets. You're able to make adjustments.
Correct.
You're able to go to your management plan to make adjustments, man. I don't think people really understand how valuable a resource or tool, or the ability that to do that, make the adjustments, how impactful that is. So, knowing how to make the adjustments is key, and understanding the fact that real estate investing in multifamily, for one, offers the ability to make these adjustments within this time period. It's to me that's just a tremendous benefit of multifamily. So yeah,
absolutely. All right, B, man. Yeah, once again, thank you so much for coming into the studio. If you guys want to get involved in multifamily, please visit bryanchavis.com. You're going to learn about all our upcoming events. You're going to learn about all our coaching programs, and you actually have the opportunity to speak to Bryan himself for 30 minutes in a free consultation. We'd love to speak with you. Our goal is to help you own more multifamily in 2020. And B, look forward to speaking with you next week, man.
Absolutely. Look forward to it.
Take care.
All right, guys.